Who was Wyckoff and why do we study his methodology? Richard Wyckoff was one of the pioneers of technical analysis in the early 20th century. He has been described as one of the 5 titans of technical analysis, along with Dow, Gann, and Elliott. At age 15, he started out as a stock runner for a New York brokerage house, and he became the head of his own brokerage firm in his 20s. He also founded and for nearly 2 decades wrote and edited a hugely successful financial publication, the Magazine of Wall Street. At one point, he had more than 200,000 subscribers. Wyckoff was an avid student of the markets and an active trader. He observed the market operations and stock campaigns of the legendary stock operators of his time, including J.P. Morgan and Jesse Livermore. He interviewed some of these big-time traders and learned how they developed and managed their campaigns. All of this helped Wyckoff develop techniques to assess the market's likely future direction by analyzing price action and volume on stock charts. Wyckoff saw that small retail traders lost millions of dollars to the big money interests over and over. He dedicated himself to educating the public on stock market technique and wrote several books, some of which are now in the public domain. He also developed a course on trading and investment that was sold for many years by the Stock Market Institute. This course integrated the same concepts that he had learned about the large stock operators who accumulated enormous quantities of stock and then marked up the price substantially before distributing it to the public. Though some of the practices used by the large interests during that era are now illegal, Wyckoff's ideas and methodology are still very relevant today. Why? Because today's big interests follow the same general principles and practices as J.P. Morgan and Jesse Livermore. They have a long-term horizon, accumulating stocks at low prices, using similar kinds of tactics, and later selling the stock at higher prices to people who get excited and jump into the market only once the price has gone up a lot. Therefore, Wyckoff's principles still work extremely well. If we follow his guidance about what to look for on the charts, we can detect today's large operators' campaigns. This allows us to hop aboard early and take profits later near the peak in price once large-scale public participation appears. No other market technician explains the footprints of the big money interest better than Wyckoff. The Wyckoff methodology can help you develop your own edge in the market.